Good morning friends, welcome to Sharekhan pre-market view. Indian markets yesterday continued to struggle and were actually down kind of 50 points on Sensex and 12 points on Nifty. This was followed up like in the previous few sessions wherein actually mid-cap continued to reel under tremendous pressure and there was correction across the board. Back, if you look at the global cues, the cues aren't good. We saw a sharp correction back in the US market yesterday with Dow plunging by 292 points, Nasdaq having a 118 points cut and S&P going down by 30 points. This was after concerns emanating on the earnings season which is going to come in, poor set of data back there and certain geopolitical tension coming back in Yemen actually which put pressure on the crude oil prices as well. Overnight crude oil prices were up 4% and today morning again they are showing a gain of 1%. So there is a sharp jump in the crude oil price as well. If you look at most of the Asian markets, given the cues from the US market, they are also sharply trading down by close to 1 to 1.5%, barring China, Shanghai index which is flat to positive. Now overall cues from Asia as well as Europe continue to be negative. Singapore Nifty is indicating a negative opening and sharp cut by 65 points early ahead of the FNO expiry today. If you look at the flows in the cash market continue to be positive from FIs. They were biased to the tune of 813 crores. DIIs were biased to the tune of 97 crore in the cash market. However, FIs were big sellers in the index future worth 1387 crore. Now given that we have expiry today, let's have a view from our derivatives team as to how Nifty is likely to behave throughout the day and ahead of the expiry today.
Good morning friends, let's have analysis on derivatives. In yesterday's market we have seen there is a penultimate trading session of the March series. We have seen Nifty starting with a negative bias in line with the negative cues from the international markets. And thereon we have seen Nifty continues to see some kind of selling pressure at higher levels and continues to remain under pressure throughout the day, mainly backed by losses in banking, infrastructure, oil and gas and metal sectors. However, sectors like automobile, information technology, pharmaceuticals and reality sectors were helped the market to restrict the losses in yesterday's trading session. However, we have managed to close yesterday's trading session again below 8,600 levels at 8535, registering a loss of around 0.5%. In the open interest terms, we have seen significant amount of reduction, that is around 3% reduction in open interest with decrease in cost of carry. That is, cost of carry have decreased from around 66% to 18%. However, the premium have decreased significantly from around 30 odd points to 4 to 5 odd points currently, indicating long unwinding pressure by market participants in yesterday's trade also. The put call ratio in line with the market showing a sharp decline in last 1 hour of trade. We have seen put call ratio also inched lower, that is around 4 odd basis point. It decreased from 0.89 to 0.85 odd levels. And volatility index, now surprisingly we have seen Nifty coming down significantly in last 1 week or so, but volatility index have been inching lower, indicating there is not much further downside from current levels where we can see support at any point of time. Volatility index in yesterday's trade, despite market going down by 0.5%, we have seen volatility index going down by around 4% to 13.15 odd levels. Now the options activity, 8,600 call option was quite active, has been significant amount of addition in yesterday's trade, which we feel is majority of on the shorter side, as it has seen an addition of around 82% and it's now the highest in terms of open interest. We have seen the open interest of 8,600 call option have almost got double in yesterday's trading session, indicating a stiff resistance in today's market. While 8,500 call option have also seen good amount of addition of around 24 odd percentage. While in put option, we have seen 8,600 put option reducing in terms of, I have seen some kind of reduction in open interest in yesterday's trade. I have seen reduction of around 24 odd percentage, indicating put writers have been squaring off their short positions in 8,600 put option. While 8,500 and 8,400 put option has seen good amount of addition. 8,400 has seen some kind of addition, that is around 8 odd percentage in yesterday's trade. However, 8,500 still remains as the highest in terms of open interest. Now in today's trade, as we are seeing some kind of gap down opening can be expected, and now if we see meaningful unwinding 8,500 put option, hence we can expect market to drift lower and can head towards 8,400 in last part of the trade. Now there is only one securities in buying period for today's trade, that is Unitech. On FI's activity, there were net sellers in index futures of around 1400 crores. However, this net selling has been coming only due to long unwinding, and they have not still creating any kind of short positions in the market in index future itself. Now, there were net sellers of around 1400 crores with open interest of index futures coming down by around 3%, while in index options there were net buyers of around 1600 crores. And in stock futures, they continue to be net sellers. In yesterday's trade also, there were net sellers of 186 crores, and stock options, there were net buyers of 7 crores only. 5 days VWAP stands at 8580 with a lower range at 8500. Since we are expecting a gap down opening, we might see Nifty breaking the lower range of 8500 and higher range at 8600. XDX Nifty is trading negative of around 43 points, taking negative cues from the international market. Last time we have seen US market closed with around 300 points lost, and hence we are seeing a gap down opening can be expected with 43 odd points, and it's trading at 8562. To give you a highlight on the rollover activity, that is Nifty have seen picked up in rollover, but it's still lesser than compared to the last series, one day prior to the last series. That is, the rollover of Nifty is currently at 58% compared to 68%. However, the rollover cost has been quite healthy, that is at around 74 odd points, indicating most majority of the rollover which is happening in April series is being on the longer side, since the rollover cost have been more or less at 74 points and it's been increasing gradually since last Monday. While in the Bank Nifty we are seeing good amount of rollover compared to the last series. We have seen Bank Nifty seeing a rollover of around 45-46 odd percentage compared to 39% one day prior to the series, indicating short positions are getting carried forward in the Bank Nifty. Hence, Bank Nifty could remain under pressure in today's trade also. That concludes from our derivative side. Thank you.
Friends, let's have a look at the trading ideas for the day. First one being ITC. Now 4 states, that is Tamil Nadu, Kerala, Maharashtra and West Bengal, which contributes more than 40% of sales for ITC, have not increased VAT rates in their state budget. Now this is positive news for ITC, and one can long ITC with stop loss of close to 319.5 for potential upside of 335 and above that at 342. Now Cipla has announced the launch of a generic version of a drug under the brand name Hepsivir. Now this is under a non-exclusive license agreement with Gilead Sciences. Now one can long Cipla with stop loss of 696 for potential upside of 731 and above that at 745. Now government has announced a new policy for stranded power plants. Now under this new rule, GAIL and GSPL will be allowed to import LNG on spot basis. However, the marketing margin for GAIL could come under pressure. Now this is negative news for GAIL, and one can short GAIL with stop loss of 387 for potential downside of 368 and below that at 361. Also, RBI has revised norms for loan reschedulement. As per the new rules, anywhere there is a crop loss of more than 50% in a taluka or a block or a natural calamity, this would result or trigger rescheduling of the loans from the bank. Now this is extremely negative for PSU space as a whole. However, immediately we could see some sort of correction in stocks like SBI. One can short it with stop loss of 272 for potential downside of 259 and below that at 254. Also PNB can be shorted as this is sentimentally negative news for PNB as well, with stop loss of 158 for potential downside of 150 and below that at 147. Moving on to the news update, Glenmark Pharma gets Supreme Court clearance to sell diabetic drug in India. Now the overall market size of this drug is close to 300 crores, so that is some sort of respite for Glenmark. M&M is planning to buy Italian design firm Pin Infra Ria. Tata Power is to buy 50% stake in Zambia's ITPC. As per media reports, Spectrum auction yesterday ends with an aggressive payout of over 1 lakh crore for the government. SKS Microfinance raises 106.37 crore via securitization of its asset. Suzlon is likely to sell SC Forge. Other assets are also planned for sale. This would overall help company raise 2,500 crore and help it to reduce its debt. JSW Energy shareholders have approved rupees 5,000 crore fundraising plan, and Ranbaxy shares will stop trading on the exchanges from April 6th. This is after the merger with Sun Pharma. Also friends, L&T to list its electrical arm over a period of next 2 years. The company is also looking to sell all non-core businesses and focus on its main business. HCC yesterday won an arbitration award of close to 217 crore. The current order book of the company now stands at 1800 crore. Moving on to watch list for the day, now stocks where we feel one can take long position with positive bias for intraday. We like stock like M&M Finance, Bharti Airtel and UBL. One can keep a stop loss of close to 1.5 to 2%. Also, people can use call options to play most of the stocks since the stocks are in FNO. And stocks where one can go short or buy put options, we have PNB and Bank of Baroda. Moving on to stocks for long-term investment, we have L&T, Aditya Birla Nuvo, Tata Motor, DVR, Infosys and Ultratech Cement, which we continue to like from long-term perspective. That's it, friends, we have in today's trading session. Thank you.